This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today is another day with no trades, but it's also another day where the market delivered exactly what I was looking for, but I just wasn't able to be a part of that move. So one thing that I learned this week is I am struggling to get on side with moves because I'll have a bias, it plays out, but then the market goes boom. And then I'm like, how the hell am I supposed to get a part? How am I supposed to be a part of this now? So I got to figure out a good way to be a part of moves. And I think I know what that is. All I have to do is let the market form the next obvious Pediarite on the 1 minute, where the entry on that and the stop on that makes sense. The risk makes sense for me to target what I know the market is reaching for within the higher time frame dealing range. I'll explain. Let's break it down. So let's go to the notebook. Daily notebook. Today is Friday, July 11th, 2025. No trades today. Today my bias was bullish and was correct, and I was looking for my bearish discount gap opening setup. It played out beautifully. Exactly what I was looking for. All right. Starting on the weekly time frame, I'm anticipating this weekly candle to close like what it looks like right now because of the lack of a high impact driver. This means I'm looking for the market to drive lower and push back inside the range. So if we look at the economic calendar, there's nothing. It's blank. Today, there's nothing. For this entire week, there's been nothing. So this entire week, starting on Monday, I've been carrying out the narrative that this weekly candle is probably going to close something like this because there's no injection of volatility. There's no reason for the market to move. And that's how it closed. So as the market's dropping lower, I'm looking for it to push back inside the range with that narrative. So the weekly range is consolidation, and I like how price has dove below the last two previous daily lows. So I'm anticipating that to be the catalyst to push price back inside the range since we're consolidating, right? See how this candle drops lower, took that daily low and that daily low. I'm not anticipating this candle to be a large down candle because of the weekly narrative. And that weekly narrative is based on the economic calendar. I'm thinking how the weekly candle is going to paint based on the economic calendar because the economic calendar is what's going to drive the market. If there's nothing on the economic calendar, there's no reason for this weekly candle to move. If it's not going to move, how's it going to close? It's probably going to close indecisive, right? On the 4 hour, we're in a range because this entire week is lack drivers, and I like these equal highs. See these highs? This high does not take that one before it drops lower. I like that. That's what I use as a draw on liquidity. And this high does not take that high as well. I like that. That's also what I'm going to use as a draw on liquidity. And this up candle could push the market to make a lower low on the day, then reverse, or it could completely overlap the down candle. So as this candle's painting, as we're going into 9:30, I'm thinking about how this candle's likely to paint. Now, one scenario I'm looking at is the market to drive up into this up candle and then close lower, maybe take that low right there, and then look for a reversal on the following candle to trade higher, or this candle is just going to overlap the down candle right there. Now, on the hourly, I'm not anticipating the market to continue down from this weakness overnight because of the weekly chart narrative. I lean more towards seeing the market push back inside the range for smooth buy side left on that drop lower. I like these highs. Boom, that's my draw. Why? Because the market's smooth. And based on the weekly chart narrative, I should not expect continuation in this move lower. 15. I really like how this was less smooth. See, the market just went, dumped, took a previous day low, and left Asia buy side very, very smooth. So another thing that was influential for the draw on liquidity today was a new day opening gap because the market just traded through it really fast. So it really only used it one time. And what makes a new day opening gap really influential from what I've seen is if that gap hasn't been used a lot or if it's still open. If that gap's still completely open and price hasn't used it at all, that's a strong draw. If it's only been used a couple of times, that's a strong draw. So I like the discount gap opening. With that and the weekly chart narrative, I'd like price to open at or near the low of day and push lower, taking pre-market sell side or all the sell side engineered pre-market, then reverse and work towards a gap fill and smooth buy side left on the way down. So basically what I'm getting at is before the market opens at 9:30, I want to see it drop lower and take all these lows in here, right, from the pre-market session, and then reverse and work towards this level here and this level here because of the weekly chart narrative, right? So this is smooth in here. So I'd like to see the market drop first and clear out these and then present the buy that I'm looking for at or near the low of day. So you can see exactly what I was looking for going into today. I was looking for the market to drop lower first, take sell side liquidity, at or near the low of day, move away from that discount gap opening, and then reverse and work towards the smooth highs here, and then new day opening gap. So if price left these intact on drop lower, that would be ideal. So there's my bias. Full in-depth detail into exactly what I was looking for going into the market today, okay? And here's how it played out. I'm gonna take these off of the 15-minute time frame. It's a bit noisy. I'm gonna take this off of the 15-minute time frame. It's a bit noisy. All right, cool. So what we got? The market drops lower in the overnight session. One thing that I've learned about bias from backtesting over and over and over again and coming to the market with an approach for that backtested session, and then at the end of that session, seeing if I got the bias right or wrong, just doing that over and over again, which I have to show you now. Right, here's what I'm doing when I'm backtesting. Every single day. So I'm backtesting 2022 right now. This is what I'm marking when I'm doing my backtesting. What is my bias? My bias is bearish because this, and this. I didn't finish this day. What is my bias? My bias is bullish, anticipating this. What setup am I looking for? Why would I take that setup when it's there? And then my approach versus what happened. So I was this, but this is what actually happened. And then what I learned for that day. So I'm backtesting. I'm taking out all these lessons. I'm getting all this experience from backtesting too. So not only am I I'm getting reps in a live market, I'm also getting reps through backtesting. And this is just multiplying my experience factor at a really fast pace. And I'm starting to get comfortable with my model at a really fast pace. I'm getting comfortable with my market approach and bias and executing setups at a really fast pace. But there is still a lot that I lack, obviously, because I'm not profitable. There's still a lot of work that needs to be done. But this is the work that I'm doing to get there. So back to, I don't even know what I was talking about. Went off topic there. What was I talking about? Okay, I mentioned my daily process that I'm taking, right? Through backtesting. Oh, yeah. I learned the lesson of why I should not let how the overnight session trades influence what my bias is for that day. Because from getting bias wrong over and over and over again through backtesting, I've come to conclusion that on the days that I get my bias wrong, my bias is influenced by a move in the overnight or pre-market session that makes the market seem very bullish or very bearish. So for example, let's say I got the bias wrong today because I was bearish. I was bearish because of this drop lower in the overnight session. That's how I usually approach the market when I'm wrong. I've only learned that though because of the reps that I'm putting in through backtesting. So I'm not going to let this drop lower influence my bias. My bias has to be derived from the weekly chart. How is that weekly candle going to close? How is this weekly range developed? How is that weekly candle going to close based on the economic calendar? That is where my best market approaches are derived from. It's using logic from the weekly chart and how that candle should paint based on the economic calendar. I only know this because I've gotten the bias wrong so many times, but I've also gotten it right so many times. So I have to go back and study. Okay, where am I going wrong that leads to an incorrect bias? Okay, where am I going right that leads to a correct bias? It's just the extra work that you have to put in off the screens, off actual live market trading hours. So initially, we have this large down candle on the 15-minute, right? And at this point in time, daily journal, what's going on here? Oh, we're still in backtesting, that's why. Still in backtesting. Bear with me. Friday, July 11th, here we go. Okay. So, I know exactly what I was thinking at that point in time. So, market opens, it takes buy side first, so I'm not sure what's next right now because I would like to see it drop lower first, but it went for the draw first. Usually when this happens, I should wait for later in the AM session. Let that sell side be delivered, then look for a buy under pre-market lows. This is what I'm telling myself at 9:35. I don't know what's next because the market moved in favor of my draw first at 9:30. When the market opens at 9:30, I'm looking for a Judas swing every single time. I'm looking for a move in the opposite direction of where I think the market's going to go to set up the buy. In this case, the market opens and it trades in favor of the draw. If we go to the 1 minute, right, we can see that at 9:30 the market went up and took buy side first. It traded in favor of the draw, and I was viewing this gap as a potential buy, but I knew that I needed confirmation on the 5 minute first, and I never got it. How did I never get confirmation on the 5-minute? Because this close, how it leaves this large premium wick, that does not tell me the market's going to continue beyond this high. Now, if this was a full body up candle that closed near its high, then I would anticipate the market to drop down into the pre-market consolidation range, touch that, and then trade for the London buy side that I was looking for. But it didn't do that. It closed like this. So that trade idea is never confirmed. So I'm laying off of that. This initial push up is making me question if my bullish bias is going to be correct. I'm thinking about the possibility for price to use the consolidation range as support and trade higher. But the close in the 5-minute isn't really what I want to see. I lean more towards waiting for the sell side to be taken to buy it later in the AM session. So what I've learned through backtesting, another lesson through backtesting, a strong lesson, is if the market trades in favor of my draw first and it leaves behind smooth liquidity, then I know that I need to wait. The move is going to come later in the morning session, closer towards 9:45, 9:50 to 10:10 during that macro, or sometimes even later at 10:30 for the reversal to come. Because I need to see it drop lower, take out opposing liquidity, and then look for the reversal, which is what it does here. Now I missed this move because basically because I wasn't tuned in with what the market was showing me at the time. Like the drop lower had me thinking that we were actually going to go lower, and I thought my bias actually might be wrong. Now I missed these details because at the time I wasn't focused on price. I let my mind kind of like doze off, and because I did that, I missed the details that the market was showing me that proved my entry model to be present. So when this large down candle drops lower, it takes the low of the pre-market range and it closed back inside the range. That's a sign of strength, because if the market was really weak and bearish and would see continuation beyond this low, what would it do? It'd lay a large down close candle over top of it, right? But it doesn't do that. It took it and closed back inside the range. That's my first sign of strength. That's my first sign to look to be a buyer. Now I want to anticipate a drive below this candle's low to fail because of how the market closed on this candle. So this candle drops down. It takes that candle's low, but also closed above that candle's low, okay? This tells me the buy is really heating up to me. It's really warming up to me. And then finally, we get another drive below a previous 5-minute candle's low that closed back inside the range. Now, because this candle dropped, took that low, closed back inside the range, this candle also dropped, took that low, but closed back inside the range. It's had 2 consecutive drives below a previous low that failed. So now on the 3rd drive below this low, I can really anticipate the market to fail. And I don't have to wait for this 5-minute candle to close. I can look at the 1-minute time frame for a large up candle to come in and confirm the reversal, like this right here. Boom, confirm the reversal. I can buy the obvious PD array, which would be the order block right here. So this is the move that I missed in the moment I see this. But recently through my backtesting, I've discovered that all my losing trades come from setups where I don't get confirmation on the 5-minute, and I take the trade prematurely on the 1-minute before it's ever there on the 5-minute. So I've been practicing waiting for the 5-minute close first. But in this case, in this situation, if I wait for the 5-minute close, look how far the market has gone before I can get an entry, right? That 5-minute close all the way up here at 9:49. So this was the entry I was interested in taking because I noticed the large up candle come in. Notice how the 9:45 candle opens, it drops, and it immediately takes the previous 5-minute low and closed back inside the range. Now it's driven below a previous low. It's driven below this low, drove below that low, drove below that low, drove below that low, and failed. And then finally, large up candle comes inside the range. That confirms reversal. Boom, that's it. That's my turtle soup entry mechanism right there. So I'm not actually buying a turtle soup, but this is what I view as a turtle soup. Just what I've learned from seeing the market play out over and over and over again, right? So I missed this move. And at this point in time, I'm trying to get on side with this move, but I'm not sure how I'm going to do that. You know, I see this obvious 5-minute gap, but I've noticed that when the market just leaves without me, I feel a lot of anxiety about how I'm going to be a part of that move. Now, I set my buy limit order at this inversion fair value gap. Never got filled, obviously, or I set it at the 9:30 open price with the stop below here. So my risk looks something like this. Like that, and then targeting that. And then when the market does this and dropped into that 5-minute SIBI, large up candle came in, I knew that there's no way that the market's going to come all the way back down to the 9:30 open price to give me a fill. It's just going to keep going. So if I know that, why don't I look to find something that allows me to be a part of that, right? If I know that the market's not going to drop lower from here, why don't I use this gap? Why don't I use these down candles? Why don't I use this gap? There's so many different ways to be a part of the move, but because it just leaves without me, I kind of freeze up, and I'm not really sure how to be a part of that move. I'm not really sure how to get on side. So that's something that I learned from my weekly review this week. I already did my weekly review. It's the first thing I did after the market closed. This move delivered. The market delivered my objective. I walked away at around 10:30, and then I did my daily review, everything that you see here. And then I went for a quick walk, came back, and then I did my weekly review. So started this weekly review. I'm trying to ask myself, what made this week so difficult? What were the easy and hard trading days? And why did I consistently miss moves? Well, the reason that I'm consistently missing moves is because the market will give me what I'm looking for, right? But it suddenly leaves without me. I feel anxiety. I kind of freeze up because I'm not sure where to place my limit order. I'm not sure where to place my stop loss to make the risk make sense, to get long on that or short on that on a retracement. So it's the scenarios where the market puts me in the position where I have to get in on a retracement, like a larger retracement, because I missed the move, that gives me a bit of anxiety and makes me freeze up. So what I've learned is how I can be a part of that move is, here we are. I have to be aware of the higher time frame dealing range for the risk to make sense. I have to let a new obvious PD array form on the 1 minute that I can use to frame an entry and stop with risk that makes sense, knowing what the higher time frame draw is. So, for example, this setup right here. If I know that the higher time frame draw is this new day opening gap and the London buy side liquidity, and the market forms this new obvious 1 minute PD array, that gives me a new PD array to form an entry and a stop loss where the risk makes sense, knowing what the market is drawing for, right? So this new obvious PD array forms. I know the market's drawing for this high with certainty. I know that it's reaching for this. It doesn't deliver it on this price move, but if I'm being really greedy, I'd put my limit order right there. If I'm being more conservative, I'd probably aim for the gap high. And let's say this worked out and got me filled. Because the market reacted to this 5 minute BISI, gave me a new obvious 1 minute PD array, now I have a new setup in price that allows me to frame the risk that makes sense, knowing that on the higher time frame, the market is reaching for this level and this level. So if I'm aware that there's that much range between where the market's at right now and this obvious 1 minute gap and where I know that it's drawing to with confidence, I can frame a setup where the risk still makes sense. So that's still a trade that I can take. It's still a trade that I can take. I just have to get used and comfortable with buying these kind of setups when I miss the move. So that's kind of what's been holding me back this week, because there was 2 days where the market literally gave me exactly what I was looking for. It even happened yesterday. This is the shit I love to see the market draw for. This is true. Check this out. Oh, all this is smooth. This is when I was annotating my charts after the session today. All this shit's smooth. I love to see the market draw for that beautifully. So yesterday, let's go back to yesterday. I was looking for this move too, right? But it left so suddenly. And it's the same mistake as yesterday. I see this obvious gap, right? I know the market's super heavy, but I'm not willing to take this gap because I'm not aware of the higher time frame dealing range. Because I know that the market's drawing for this with confidence, but I'm not aware that the market could also draw for this down here, right? Because this is another draw on liquidity. All this is smooth as well. And there's also a lot of the market's inefficient here, so we'll seek to rebalance that. So now we have inefficiency and liquidity that would act as a strong draw. I could still take that gap. Missing this move right here, I could still take that gap and have a 3R on that. But I don't, because I'm not aware of what is the market reaching for on the higher time frame dealing range. It's the same mistake that I made today. So this setup and this setup, both of them could have put me up on the week, and I could have ended this week, probably profitable. Let's say I made 59. Let's just round it up to 60 handles on that, and let's just say I made. This was a hell of a setup. It just did not get me filled. Let's say stop loss would be above the mean threshold of this candle because this gap is paired with an order block. So it doesn't have to go above here. It just goes above the midpoint of that right there. And then target those gaps, let's say 60 and 90, 150 handles. That puts me up on the week, right? 150 handles reasonably just from those two setups. That puts me up on the week, but I'm scared to take those setups because I'm not aware of what the higher time frame dealing range is. So I think that's going to be it for this one. This is how I ended the week. I ended up going 3 days in a row without taking any trades. These days very frustrating because I knew they were not good trading days, did not present my setup at all, and I hurt myself really, really bad on them, right? These days they could have put me up on the week. I had a really good read on price. It gave me exactly what I was looking for. I missed the move twice. So overall, it sounds like a pretty frustrating week, right? Now moving forward, I know I have a model that makes sense. 100%. It's there. It happens. It repeats. It's there. I know how to read it. I just have to get comfortable with seeing it play out over and over and over again because I still have that bit of doubt and uncertainty in me simply because I haven't seen these moves play out many times, right? The more experience that I have with my model, the more comfortable I'm going to get with it, the more comfortable I'm going to get executing on it when I know the better I'm going to get at timing these moves. Long story short, in simple terms, I'm going to get good at timing these moves. I'm going to get good at where my entry is, where my stop should go. And eventually I'll be able to walk down these moves consistently, which is the goal. I have to get really good at knowing what days not to trade and knowing what days my model is there and execute it. So that's going to be it for this one. Talk to you next time.